Psychology is the study of human behavior. It helps us to understand why we do the things we do and how we can change our behavior for the better. In trading, psychology is just as important as technical analysis. Because psychology affects our trading decisions, it can be used to our advantage or disadvantage. In this video, we will discuss the psychology of fear and greed in trading, and what triggers us to make bad trading decisions. We will also offer tips on how to overcome your psychology when trading. Before we proceed to the video, make sure to subscribe to our YouTube channel and press the bell icon to stay tuned to learn more. Let's talk about fear and greed in trading. Fear and greed are two of the most powerful emotions that drive traders' decisions. They can both cause traders to make irrational decisions that lead to losses. Fear causes us to focus on the worst-case scenario and act out of panic instead of relying on our analysis and strategy. Greed, on the other hand, causes us to focus on the potential rewards and not think about the risks involved. So what triggers us to make bad trading decisions? There are many psychological traps that traders fall into when they're trading. One of the most common is overconfidence, or believing that you know more than you actually do. This can lead to reckless trading decisions and taking on too much risk. A second trap is confirmation bias, or relying too heavily on information that confirms your beliefs rather than looking at all angles objectively. Finally, loss aversion is a trap that can cause traders to hold on to losing positions for too long in the hope of avoiding a loss. This can lead to even bigger losses. By being aware of these psychological traps, traders can try to avoid them. However, it is important to remember that everyone is susceptible to these traps and that even the most experienced trader can fall into them from time to time. The key is to be aware of them and to try to manage them as best as possible. It is greatly important to overcome psychology when trading. The key is to focus your energy and mind on the task at hand. One method is to develop a trading plan and stick to it. This plan should include things like entry and exit points, risk management strategies, and profit targets. Set realistic goals for yourself and then break them down into small, manageable steps. The best way to overcome psychology when trading is by having a sound trading strategy. Having a strategy helps to keep your emotions in check and keep you focused on the task at hand. It's also important to be aware of your psychology and try to recognize when it's influencing your decisions. Finally, having a risk management plan in place can help limit losses if things don't go as planned. By understanding psychology and its impact on trading, we can work to make better decisions and reduce losses. Being aware of our psychology is the first step to being a successful trader. With this knowledge, we can be more prepared for market conditions and take control of our emotions when trading. Don't forget to hit the subscribe button so you won't miss any of our helpful content. Thanks for watching.